I have to just share one little anecdote because I was so glad that Diane spoke about the WEF. I told Jen, we were looking for someone to moderate the panel, and I don't follow the financial press probably as closely as many of you, and I emailed an economist friend of mine, a male economist who's quite well known, and I said, I'm looking for a really fabulous woman who writes on and works on AI and fintech, and what do you have a suggestion? And his answer was, there really aren't very many. And I was like, yes, but there are some, and I'm going to find them. So anyway, but look, this is part of what I think, what we're so committed to at AIT is that there's no subject of any kind where there are not amazing, qualified, talented, brilliant women who can speak to it and who work on it. And it's a question of trying. And, to the point about why this is a majority female room, just in fairness, it is not, we of course welcome everybody, but we actually think there's value in this. And there is of course tremendous value we do need men at the table, we do need men advocating for women, but we also think that particularly in industries where women remain so dramatically in the minority, as they are in financial services and they are in tech, we think there's value in putting a whole bunch of women in the room together so that they see and know each other, and we understand that A, we're not alone, and B, we can support each other, and C, we're changing things. And so I'm enormously grateful always when we have a gender diverse room, but we are not specifically trying to do that for this. And there are places and spaces for that, but I also think there's sometimes not enough places and spaces for brilliant, exceptional, talented women just to get together and push each other's thinking. And so that's part of today's agenda. So with that, we're going to have another amazing discussion before we take a brief break. I'm super excited about this, and I think the previous panel set this up beautifully, which is the ways in which we are using our professional expertise to drive change in the world. And so I'm really excited to hear from this amazing group of people. I'd like to welcome up our moderator, Patsy Doerr, who is also on the executive committee of the board of All In Together and is at Thomson Reuters, Refinitiv, not Thomson Reuters, soon to be, yes, the names. I'm still trying to get the new names of Nuco correct, Ida Ekpoudom, who's going to join us as well, Stephanie Luedke, and Kirsten Salander, also my dear friend. And their bios are all in your programs, and so please join me in welcoming them.
Great. Well, excellent. Well, thank you so much for everybody for being here today. I know I'm delighted to be here. And yes, it's very complicated. Thank you, Lauren. I work for Thomson Reuters. I basically built out their diversity and inclusion, sustainability, and corporate social responsibility function globally over the past 7 years. But the company is going through some interesting challenges and changes right now. So it's an exciting time in my view. So glad to be here. And we've got a great panel. And our focus, as you know, is going to be talking about social good and impact investing. And I think a lot of us get excited about that topic, the intersectionality therein, and what some of the opportunities and challenges are for us as professional women, as consumers, and as individuals as well, right? So as a backdrop, it's an interesting time, as we all know. But before we get into that, I'd love to ask each of our panel members to briefly introduce yourself and tell us about your role.
Great. Hi, good morning, everyone. My name is Ida Ekpoudom, and I'm a partner at Gingerbread Capital. And Gingerbread Capital was started by Linnea Roberts, who, after a long career on Wall Street in investment banking, and everybody asks, and I will tell you the backstory, Gingerbread, that's an interesting name. Why is it named that? So it's named after her mother, Ginger, and her mom in the 80s got fired from her publishing job, and she was a single mom of 4 kids. She took her $10,000 severance and used it to start Minority Business Entrepreneur magazine, which she then ran for 25 years. So having a strong mom is definitely at the heart of it. So great. This is why it's called Gingerbread Capital. And we focus on backing high-growth, female-founded companies. So I like to say, if there's not a woman in it, we're not talking to them. So, VC is heavily male-dominated, writing the checks. And so we want to change that dynamic, both by funding directly to women entrepreneurs, but then also by backing female-led fund managers that are also writing the checks to spread that out as well as limited partners.
Fantastic.
Great. Hi, good morning, everyone. I'm Stephanie Litke, and I run a group called City Investment Management. We're the investment management arm of City Private Bank, and oversee global teams managing money for City's clients all around the world. I think I'm here today because over the past year, I also led our effort in getting into impact and sustainable investing for our client base and ensuring that Citi Private Bank is committed to this very important area and building out, a strong breadth of capabilities that can deliver solutions that we think some of our clients today, and in particular female investors, some of the statistics were commented on earlier, as well as future generations and some of the younger potential clients and future clients of our organization are very passionate about this. So we've been spending a lot of time on it over the past year.
That's great.
Hi, I'm Kirsten Barnett. I work at Bloomberg and I manage our Gender Equality Index, which is essentially a platform to connect companies that are committed to gender equality with investors looking to direct capital. And it provides investors like Stephanie with the comparable, standardized data around gender equality in the workplace beyond what is in public filings like Women on Board. So it's a much more robust group of data points across companies, people, but also its products, its services, and the impact it has on its communities.
That's great. Thank you very much. As you can tell, we've got a fantastic panel and a variety of different perspectives, which I think is great. Kirsten and I have actually been on a number of panels together, so this is looking very familiar. But in any case, so as we mentioned earlier, but obviously this is a hot topic for a variety of reasons. We're at a very interesting time, to say the least. I'm an eternal optimist, so I say interesting. Challenging geopolitically, not only in the U.S., obviously, but globally. Certainly voices are rising, and whether it's the Me Too movement, Black Lives Matter, and otherwise, there's just higher expectations in our world today for us to respond, right? And then from a corporate perspective, which is the angle that I come from, having been at Thomson Reuters and prior to that in investment banking for many years, the expectations of our employees, of our clients, and obviously our investors are on the rise, and this is how people are making decisions. So again, interesting timing. Impact investing as an industry, if you will, is on the rise as well. I think we're at about, depending on which study you look at, about $250 billion US globally, rising at about 18 to 20% a year. So exciting times. So my question to the panel, and maybe we can start at the other end this time, is what does impact investing mean to you, and why are you committed to it?
Yeah. Well, I think what I think is, to answer the first question, I think that impact investing is actually becoming much more of a mainstream investment strategy now. I think hopefully soon it won't be considered a niche, but this is just, investors are increasingly using ESG data, not just for particular social impact funds or investments, but also just as part of their normal risk analysis and how they value a company's reputation and performance. But what really excites me about this is I think that this is going to be the game changer for our workplaces and for all of us women and men in going forward. Because if you think about up until now, companies were incentivized to build a strong, inclusive, and equitable corporate culture in order to attract talent. Now, companies are going to have that culture in order to attract capital. And there's really two things you can't run a business without: people and money. So I think that soon it's going to be three things you can't run it without: people, money, and a kick-ass, equitable, gender-friendly culture.
Absolutely.
So completely agree with that. I do think with this topic, right, and we talk about it, it's in its infancy as an industry today, and as a result, I don't think we've clearly defined all of the terminology. So within our organization, what we've done is we talk about it more broadly around sustainable investing, and for our clients, when we discuss it with our clients, it's around investing with purpose. And when we look at it more technically, we're looking at a spectrum of investment opportunities. On the one hand, there's what you just referred to as ESG integration, and in just traditional investment management, integrating non-financial factors into the evaluation of potential investments. And there's a whole host of reasons we may or may not get into of why that's more possible to do today than ever before. But that's traditional. That's more of traditional asset management. I think it's a little bit of a push to refer to that as impact, because it's hard to understand specifically and trace those investments to an actual impact. However, over time, undoubtedly it will be impactful. And then you move out this spectrum of investing, and where we refer more specifically to impact investing is probably into your area, where you have investors who want to make a specific investment, but also want to know exactly the impact or how that investment is going to have some sort of greater good. And there's a whole, gender, make an investment that's going to improve diversity. Maybe it's getting clean water to a community that doesn't have enough clean water. There's a whole host of examples. But we look at it kind of ESG integration out to impact investing. Similarly, and on the ESG side, think that ultimately there won't be two different approaches to traditional asset management, but the best asset managers are going to include non-financial factors as a matter of their regular investment disciplines.
Interesting.
Yeah, and I mean, I think for me, I always laugh when people are like, oh, wow, you only focus on women. Isn't that a little niche? We're 51% of the population, and generationally the wealth is moving to women. And I'm just like, the former trader in me is, I'll take that trade all day long. And I mean, and it's also from the perspective that if you think you're investing in women, you think you're investing in a nonprofit or something that's around philanthropy, because all we want to do is hug people and like make the world feel better, which we do, but we also want to make money. And so it's like, I am gunning for the same things that any investor is gunning for, which is high returns. And we like to say we're wanting to back the future millionaires and billionaires that will go out and then spread that money. But like to think that because it's a woman, it's a different kind of investment is exactly the thing that we have to counterbalance. And I thought there was a really interesting article that the CEO of Carta, which is now one of the ways like a lot of startups are putting their cap table and keeping track of how their equity is laid out. And he said, when I started the company, I just was trying to stay alive. So I wasn't thinking about, I just needed people and bodies. And then I thought once we got to a place that diversity would just magically appear and everything would be there when we had stability. And he goes, it didn't. And I realized that if I didn't actually focus on it and do something about it, that it wouldn't actually happen organically. And so that's kind of why we invest with intentionality, because we believe that if you just leave the status quo when it comes to the flow of capital, it might not go because people revert to what they know. So we are trying to take that group, and we're happy when we see gender diverse teams. That just shows that there's an enlightened man that knows that having a strong woman at his side is a great thing. So we're happy to make that check and look at those kinds of companies.
Well, first of all, I love what you said. Women as a niche market.
It's like ridiculous.
51% of the population.
And 11.2 trillion in investable assets. So
exactly.
If you want to ignore that,
right,
I'm okay with that. I'll take it.
We'll take it. Exactly. Yeah. Well, it's interesting, right? Because, as you said, though it's no longer, clearly not a niche market, and clearly with financial decisions being made more and more by women, although historically they have been in the majority, but now it's probably more so, right? At the same time, you're also seeing, the wealth allocation moving into the hands of women and millennials, of course, which I am one, but, that's another story. In any case, but where do you all, and I'd love to get your all's views in addition to your own, as we've just started talking about it, where do we see that headed? Right? Where do we see the market changing in that regard, and what needs to happen in order to accommodate those changes?
To pick up on just the amount of wealth, right now it's for anyone who doesn't know, it's the first time in history that women in the U.S. control more assets or allocate more assets than men. I think it's roughly 14 trillion or whatever he said, and that over the next 10 years, $12 trillion will shift from baby boomers to millennials, which is the largest, generational wealth transfer in history, equal to about 3/4 of our GDP. So that's a lot of money. And I think that women and millennials often have in common that they want to, they feel the way, Ita just framed it, that she wants to invest, but she wants that to have an impact as well. And so I think that where the biggest shift is going to be is the client demand is ultimately what I imagine shapes, people like Stephanie, how they're building their products, how they're advising their clients, and just what those clients are looking for is different than in the past when it was just financial return. And I think that it will also be interesting to see that as this shift happens, for our clients who are the cities of the world and investors, I think those that don't get this right and stick to their traditional way of thinking and marketing to clients, I don't think they're going to be around anymore. But.
Right, absolutely. Stephanie?
Yeah, so we are absolutely seeing that our client base, the demographics of our client base are shifting. So we're already seeing it, but we are anticipating for all the exact reasons. You could have given my presentation last week. For all the exact reasons is why we're committed to this. 90%, and then on top of it, 90% of women surveyed have indicated that they want to invest at least a portion of their wealth in a manner that aligns with their values, right? So these two things come together. I don't think impact investing is just for women, it's for a much broader group, but women are far more inclined than your kind of average, from our perspective, average client historically. Women are the primary breadwinners of 44% of the households in the US, for example, right? Women are not just going to be wealth inheritors in the future, but they are also wealth creators, right? Women really are remarkably underserved in the financial services industry. Something like 51% of women with over $1 million in assets don't have a financial advisor, right? So all of these things, I think, stack up toward making sure organizations like ours are able to work well with women as a client base and also deliver the types of investment strategies that they're interested in, and it is well documented that they're interested in sustainable and impact investing.
Absolutely.
Yeah, and I would also say it kind of goes down to the employee base, right? Before you kind of started a career and you thought, I'll be there for the next 20 years, I'll rise up, and you see that lifespan of people staying within an organization getting shorter and shorter, especially if they don't have opportunities to feel like they're learning and growing. And, people look up and they're like, can I see myself? Like, you can't be what you can't see. I think people really believe that. And if you look up and you don't see women in positions other than where you traditionally see women in leadership, you start to think, well, is there a place for me here? And that's why you see a lot of women, particularly when you get to kind of the middle management tier, say, do I see myself here? Am I valued? And then you see women going and starting businesses. And women are starting businesses 1,200 plus a day in the US. And the largest category of women starting business is women of color. So it's no surprise that if you're not seeing yourself in a large established institution, you go and carve and try to build the business that you want to see. And I think millennials in particular are building those kind of businesses early, and they build it with diversity in mind because they grew up with thinking about it in more organic ways. And I think it's also no coincidence that the bad behavior that we saw kind of in the tech world was the line was crossed. And it was younger women that spoke up that said, I'm not having it anymore. They had mothers who may have suffered and told their daughters, don't stand for this. And those daughters have grown up and they're not standing for it because they had the kind of thing that came before. So I think that will only continue.
Right. No, absolutely. And again, seeing it from the corporate perspective, and you mentioned it earlier, Kiersten, as well. I mean, companies have to respond to this, right? We have to build a culture that allows for, it was brought up in the earlier panel, for authentic conversations, authenticity, and I call them courageous conversations, but it's all essentially the same concept, right?
There is a study I just read. I think it might have been McKinsey. I'm not 100% sure, but it was focused exclusively on financial services and recent female attrition. And the study basically concluded that women are coming in at a 50-50% rate to men, but where the biggest place where we're losing women in the workforce is at the first promotion cycle. So 2 to 5 years in. That kind of surprised me because we're really focused on bringing people into organizations. We're focused on trying to bring women back after having children. We're focused now on trying to get women promoted at the really senior ranks. All those things really important. Right. But there's something going on. All the women that you're referring to who are leaving big financial services organizations, there's something going on really early in our organizations where we're losing these women who we spent all this time recruiting and who are just as talented as the men.
Right. And we have to look into that. And this is a data-driven panel, right?
Yeah.
An entire panel as well. I think it's exciting that we have to really look into that. And certainly just slight diversion, but related on the diversity front, I think we definitely have to always be looking at the entire employee life cycle. right? I mean,
Yeah.
you see these efforts fail if you over-focus on recruitment or over-focus on development or over-focus on fixing the women, per se, when really you've got to focus on the culture, right?
Well, Patsy, if I could pick up on that, I think that, with investors demanding more disclosure from companies just because of their appetite for this type of data, I think that that is going to be a really critical piece here because access to data, without the data, our pulse on how gender equality is progressing or any other metric is really just a feeling or a hunch. And I think that without the data disclosure, learning what's working and what isn't, identifying those exact problems of, oh, that's surprising, we would have thought it was later, to use your example, without the data disclosure, all of what we're learning about where we are, seeing pockets of progress, and what is working is just going to be anecdotal at best and not very comparable. So I think that another nice, sort of side effect of investor demand for this type of data is just going to benefit society, the economy, everything as a whole.
Right. No, absolutely. The data piece is critical, right? There's much more expectation and transparency around ESG data, as we know. All types of data, frankly. And on that note, actually, slight divergent thought, but related. How do you all, in your roles in particular, balance, analyze, and communicate that correlation or intersectionality between doing good and positive financial returns?
Well, I think for us, it's pretty easy, right? Like, we are actually directing capital. We've taken a thesis that we believe women make money. And so we're going around finding women, and for us, we look across industries. We're not just necessarily focused on one thing or the other because we believe women are innovating across industries. Everybody is like, well, women are doing consumer things, or as if that's a bad thing. This is what runs households. So if they're solving the needs of a common person, then we think we're all for that. But then we also have women innovating at STEM. I'll be asked, we really wanted to get a woman on the panel, but we really couldn't find any. And I was on one, and I was like, well, what's the topic? And I gave them 5. They're like, oh, wow, ask a woman. If you want a woman, and you think that, go ask one, and I'm sure she can know you. Binders full of women. It's a real thing, and it's our minds. And so it's just one of those kinds of things. But we're using it by directing our capital and kind of seeing where the exits are. So Gingerbread, which was started in 2016, we actually had our first exit this month in Eloquy, which was bought by Walmart for $100 million. And the thesis of plus-size women want to look good too, shocking, It's just one of these kind of things where it's like, okay, now that Walmart has and a team of men that are overseeing that have bought it, we're validating this. Women knew this all along. So this is the kind of thing, but until you make money with it,
right.
It's not going to go mainstream, and that's why we're going from the for-profit angle versus the philanthropic angle.
Makes perfect sense. I love Ask a Woman. I think we should just take that away. Clear action.
Hashtag Ask a Woman.
Exactly.
Stephanie?
So for me, I'll kind of give a personal and professional. So for me, when I started my career in public accounting, and I was one of the only women there, and I was required to wear skirt suits. So I was really the only woman in the room most of the time my first 2 years there, and they also somehow had the ability to tell me what to wear. So I grew up in it very used to being the only woman in the room in almost any scenario until recent years. And so I'm a part of that generation that just had a little bit of a hard time getting pulled into talking about this stuff out loud. So I also now run the diversity committee at City Private Bank. And I started to read a lot of the studies around the gender lens investing. And I think this is the first time that I found my voice in these matters because it was a business imperative, right? That businesses perform better when they bring diverse perspectives together, and in particular when there's gender diversity around the table. And that helped me find my voice in these matters because I could go at it as, no, this is not just, stick up for other women. I could say, this is good for business. This has a broader justification. So that was sort of the drive there. So when we were looking at developing our sustainable investing efforts at Citi, our job first and foremost is to provide high-quality investment advice to our clients and to ensure our clients meet their long-term goals and objectives. So this is not their philanthropy bucket of capital. This is their bucket of capital where they are looking to earn a certain amount of returns within a risk profile. So we did a lot of work, and lots of other organizations have done work to prove out that, and we did, companies that score better on environmental, social, and governance factors have better financial performance. Investment managers who do a good job at selecting those companies and investing in those companies deliver better risk-adjusted returns over the long term. So we have a very strong investment thesis that companies that embrace sustainability, environmental, social, and governance matters and do that well perform better. And so the same thing going into gender lens, it's looking at, and there's a lot of data that supports that companies that are diverse have better financial performance around a whole host of metrics, right? I still think it's in its infancy, getting the information, figuring out the factors, and there's a lot of risk to failure with this and the unintended consequences of that, but something we're spending a lot of time on internally because we believe in it, and there's also, I think, a tremendous investment opportunity for investors.
I think that you made a great point there on the infancy. I do a lot of work with women on boards, and obviously I'm a proponent of women on boards. It does make me nervous when I see certain investment products and things come out that are just measuring whether a company is a equitable company, great place to work, company with a purpose based on whether or not they have 3+ women on their boards, because that's just one data point. Right. And we wouldn't make any other investment decision off of just one data point. And I think that while I applaud any effort that's elevating the issue, and again, women on boards is important, I think the reason that we've only seen products and things or indices around that is because we've been limited to that data. And it goes back to the data again. And I think so if that's all you have to work with, and that's all that's in public filings essentially, or a few data points, then that's what you have. But I do worry that then if, say, some of these, and there's some are performing well, some are performing less well, but those that are less well, I don't want to hear someone say, see, actually, it doesn't help to have more women, diverse workforce. In fact, it might be hurting because that's, again, we know that's not why. So the argument of causation versus correlation is one that I still don't think that, every time we read the research about how, again, I'm more looking at it from a gender lens, but how diverse workplaces ultimately hit the bottom line. It hasn't been strong enough that you couldn't have that skeptic make the other argument, around correlation. What we were doing with the Gender Equality Index and what others are doing in similar ways is I think the more and more you have reporting frameworks like SASB or GRI around environmental and other sustainability data, what we're doing with the GEI framework is that's around 70 different data points. Now, if you look at how it's early days for our sector neutral index, only a year old, but it's outperforming lots of major benchmarks. So and hopefully it will continue to. I think when you look at that, it's hard to say that when you're looking across 70 different metrics in a company that it's just correlation and it's not direct causation. So I think we have back to I think the original question was, we're personally falling. When I think about, my own portfolio, there is a small component where I'm able to invest in, in private companies that are having an impact and where I can get behind that purpose. I'm not in a place where that's where I can spend most of my time. Most of my time is the long-term, wealth management goals. And I think with that, I would love to be able to see more and more products and as individuals like Stephanie are picking those companies, we do have a lot of data to go on, but I think we can go so much deeper. Yeah. Things like the supply chain, we still don't have a lot of standardized ways of measuring. What do diversity initiatives in your supply chain look like, or dollar spend, or things like that. And I just think that there are a lot of areas that I hope we'll continue to delve into, because the more and more data you have, I think you can narrow it down to just really those top companies that are going to give you a longer term sustainable return.
Yep, no, it's excellent. These are great comments, and I think to Yarl's point, I would agree. I mean, it's definitely infancy stages, but we're seeing positive developments, right? And again, getting back to transparency and frameworks around ESG data, we have to dig into that more in order to really be more successful in this space, and people are expecting that. So on a different note, again, but related, obviously, thinking about policy change that may need to happen in order to support the work that you're all doing. Can you comment on that?
Yeah, no, I mean, I think that it's going to have to be public-private partnerships that are really driving it, and I think change can be driven a lot faster from the private sector. It's funny, you know, what I'm doing now, it literally is a chain reaction of, I was actually a finalist for the White House Fellowship, the first under the Trump administration. Had I gotten that, I would have been in DC, and my life would have been very different. I didn't, and then I ultimately ended up taking this role. And I see that one of the reasons when I applied for the fellowship is, you know, I kind of felt that I wanted to be at the table to see what was happening over there. And I realized that, you know, that would have been a great path, but I also actually feel so much stronger that the path that I'm in right now is the thing that can really help long-term by helping build the smaller companies that will become the bigger companies of the future, and building those that are building in internally policies from their side. But I do think that on the public sector side, it's necessary. But one of the things that I'm loving is I'm seeing private side women go into public life. So my favorite example is my dear friend and mentor, Shelley Brindle. She was the first, it's crazy. We went to the same high school. We were a few years apart, but she was the first woman to make it into the C-suite at HBO. And she was there for 25 years, the first woman there. And she left and retired, and she was planning on just being retired. 2016 happened, and she was like, I want to do something. So she went and she ran for mayor of her town, Westfield, New Jersey, and they won the whole ticket, up and down the ticket. So a woman that's been running a $4 billion business is now the mayor of the small town. You know she's running that small town like a business, and it's really fantastic because she's able to speak to business people and talk to them about the topics, and she's able to speak to people about what's happening in our community and relate, because she was a mom where lots of women in the community didn't realize she was a C-suite executive. They just saw her at the soccer games, and only when she was campaigning that they realized what a big job she had. But I think that movement of public to private by women in both sides is amazing and crucial.
Yeah, absolutely. That's great.
And so, you know, picking up on that, I agree that it's important for women to be visible everywhere, and for to really change and have a sustainable change over time. It is going to have to be private and public. I'm less of an expert on the policy side of things, but this is an opportunity for me, being in financial services, to move the needle on some of these really complex matters that, you know, and make a difference for the world on a go-forward basis. I also do think money speaks volumes. And so if investors and the investment community as a whole values things like gender equality, that is, you know, ultimately will drive significant change. Because if public companies know that you are evaluating them, not just on how many people they have in the C-suite, but what are their policies and procedures around diversity? What is the culture of their organization? With technology today, you can go out, I don't know how to do this, but you can go out into the internet and you can get all I know how to go into the internet.
The Google.
Machine learning, right? You can go out and pull all this information from all of the chat rooms where employees of companies are making comments about their employer. And you can analyze that using technology. You guys know better about this, the panel before us. Analyze the words being used in those chat rooms to understand better the culture of a company. So it doesn't matter what the company puts in their press release. It matters what people in that company are feeling and doing and saying. Now, we never could do that before. And now you can do that in a systematic, really meaningful way with some quantitative rigor. So those are the types of tools that are being developed that are making this possible. So if companies figure this out, whether or not they ultimately at the top are saying, you know, we really believe in fostering a culture of inclusion, they're going to want the investor dollars. And people throughout the organizations, I think, are going to start to address some of these matters in a very, you know, much more meaningful way. And that is going to be needle moving over time.
It's great.
Yeah, I totally agree. On the policy, versus private sector-led things when it comes to diversity initiatives, I usually look at this as sort of the difference between power and influence. Like power is, having authority to make change, but influence is having the ability to change minds and ultimately get to that same changed behavior. I think that the second is much more sustainable and in general, kind of talking about any topic, but particularly when we look at this, the example of what the investment community is doing to influence change here is so powerful. And I think that in most cases, not all, but that has proven to be more powerful than policy a lot of the time. You look at the largest 3 asset managers in the U.S. Last year was the first year that they all used their proxy voting power to vote against management on boards where they didn't have any gender diversity. That's huge. That sends a really huge message. And so I think that that's really exciting from the influence side. Where I have seen, I recently have become a little bit more conflicted on the policy side, because I used to look at things like Norway, where they had gender diversity in quotas, and 40%, they were one of the first countries to do that. There are 40% women on their boards. When they did that, a lot of companies delisted. Definitely was an unintended consequence and sort of ridiculous. And there are maybe 2% women CEOs there. So that trickle-down effect that it was a well-intentioned policy or quota didn't happen. At the same time, I look at what's happening in California right now. I mean, and this is specific to women on boards, but where they're now first state to mandate quotas around that. And granted, there's going to be a lot of legal, I think, back and forth for a long time, but I think the threat of quotas is always really helpful. And so I do think that that's elevated the topic, and there's more conversation around it. And I also think that where my mind has started to shift is, when California happened, I thought, okay, I didn't used to like quotas, but at the same time, we now have, I think, policies without the support to back it up and make it happen in a responsible way are where you fall ineffective. I think now, like, the U.S. does have a strong, incredibly strong pipeline of women that can be sitting on board seats. It also has amazing organizations that are there to support companies that are looking to do that. So I think in that case, like, that'll be interesting to see, but having the support ready from the public sector, having the influence coming from the investment community, and maybe having the right smart policies, which will definitely get only smarter with more women behind making those policies. That could be the convergence that we need to really see accelerated progress, at least in our country.
Yep. Really, really well said. It's that convergence, right? It's the public-private sectors coming together. And again, it gets back to where we started, right? Expectations of companies and others to really play a role in this space. I could ask you guys 5,000 more questions, and we could continue this dialogue forever, but I know we're running out of time. But we have time for a couple questions from the audience? Yeah. Okay, great. Questions? Come on.
Yeah, I'm good. I saw that hand. We have some amazing experts in the room, particularly, that we should hear from. Yes, in the back.
Hi, ladies. Thanks for everyone for being here. So my name is Amy. I'm a private wealth advisor at Morgan Stanley in Boston, and I'm very involved in the impact community up there. But what I'm starting to see is there's a huge disconnect between the community and the firms and the organizations that are really focusing on making an impact within the community and what's actually available and executable within our client portfolios. And Stephanie, you're nodding your head. Yep. And Kiersten, you kind of touched on this too in terms of products that are available out there right now for our clients. A lot of it is just ESG screens, and in some ways I think of it more as a marketing ploy, if anything. Where do you see in the next couple of years, what's on your radar that's getting you excited about changing that disconnect?
I can speak to the traditional side. So completely agree. It's something we grapple with too, because we don't want to be the same as what we're seeing across the industry, is having a great story and not really having investable ideas for our clients to back up that story. So we're very focused on that. I can say two things that keep me optimistic, because a lot of the strategies to what you're pointing out that are available today are what I refer to as low barriers to entry. Throw a couple screens out there, come up with a nifty name, and attract some assets. And they'll attract some assets for sure, but they're very unsophisticated, not really clear whether they're going to be sustainable types of strategies. I have spent a lot of time, we manage money on a proprietary basis internally, but we also have relationships with all of the large third-party asset managers as well. And I spent time over the last 6 months inside of all the big asset managers working on this topic. And every single one of them has significant product in the pipeline. So I think we're only at the beginning. So the way our organization is approaching it is to try to make sure we're understanding what's going on from an asset management perspective, what are the tools and capabilities that organizations are developing today so that when they're available, we'll be quick to make them available to our clients. I would also say that some of the really research-oriented asset managers have dedicated, they're usually centralized today, ESG teams, right? So groups of analysts who are focused on those non-financial factors we talked about earlier, and they are influencing investment processes across the entire organization. Those organizations aren't necessarily branding their products as ESG. And so that's where we're going to see convergence. I think that's where we end up ultimately. But we're keeping our definitions open enough to invest in those strategies that we know are rigorous with respect to ESG, but they're not necessarily named that. And so that's how we're addressing it. It's much harder on the impact side, the illiquid side. It gets very customized very quickly, very high barriers to entry, usually for the ultra high net worth, which is a big part of our client base, but that's very niche-y.
Yeah, I think if I could just add that I think we're just at the tip of the iceberg around what products are going to be out there. And I think the thing that collectively everyone just needs to focus on is that the data we're using for those products is good, because there is a risk to getting this wrong. And so the more and more that we can standardize these things and build responsible products around them, I think that'll only amplify the amount that are available.
Yep, 100%.
And from the perspective of investing in private companies, if you Google PayPal Mafia, and there was this one portrait that was taken of the founding PayPal team. So you've got like Peter Thiel, Elon Musk, and you see the web of how they went from their companies and backed each other in their next endeavors. So they've all become billionaires multiple times over because they went and they invested in their next, in their former colleagues' companies. And it's a really powerful photograph because all of them have become billionaires, but they all did it by backing each other. So one of the things that we need to realize is that female entrepreneurs, once they've made it, need to do something similar. So I don't think right now you could put together a portrait that so intimately shows this web of wealth creation just from ground zero as you can with that. So I think part of that is on the private sector, the private side, seeing that kind of ability be created too.
Well said. Okay, so we've got time for one more question.
Just following on your last few comments about the products and women investing in female entrepreneurs, do you think we need a different view on risk tolerance of women and participation in private equity? How do you see that changing so that it's not just the female founders who made money investing in their peers, but women investing earlier, like myself?
It's absolutely also needed to happen because, as we talked about, the wealth transfer is going to women and wealth creation is coming from women. One of the things it was really interesting is that there's lots of organizations that are coming up that are helping individual women get themselves smart and thinking about the making private investments. And one of the things that is an asset and a strength is that women ask questions. And so some people are like, oh, they ask too many questions. And I'm like, again, why is this a bad thing? And so I think one of the things is starting out, where do you feel comfortable from a perspective? You might not be an angel investor where it's just an idea. You may want to see something a little bit later where you can actually dig into it. And I think one of the most rewarding things is that earlier stage companies, they actually want your advice. They want to know if the skill set that you bring, they want to know that. So understanding that there are now organizations, before I joined this, there's an organization called Plum Alley that works with helping individuals invest in private companies by creating syndicates. But there are organizations coming out there that are educating women on how to look at these term sheets. And there was a woman that's a senior partner at one of the banks and said, my team is kind of 60-40 men and women, and I have to sign off on all private investments that are made on the desk. I realized that I was signing off on all the guys on my desk. Not a single one of the women in my desk was making private investments, and it made me realize that I, as the senior partner, had not made one. And a light bulb went off for her, and she was like, something's off here. So realizing that we have that ability to start educating ourselves and give ourselves the optionality to do other things with the wealth created.
Any other comments?
No, I was just actually going to say one quick story, but around risk and women and what you said about women being more apt to keep their money under the mattress. I mean, I was the prime example of that. I can remember the first year that I got a decent-sized bonus. A year later, being at Bank of America teller, like taking out money or something, and the woman said, "Are you planning to maintain this balance?" You don't want your teller asking you that. That means they think that you're about to like make a down payment or something, and that's what's there. And it was, it had been sitting there for a year, probably made $1 return, and I just hadn't thought about it. And you know what? I think that is so much that is such a more common story for women, and particularly young women, than it is for men. And I think so. Even before you get to the stage where we're investing in private companies, just invest is such a critical thing for women to think about.
Absolutely. Stephanie, anything further?
Well, I would say there's a lot of academic research that says that women have a lower risk tolerance than men. I'm very mixed on the results of that. But there is also research that supports that they don't necessarily have a worse, women who do invest don't necessarily have a worse outcome than men. They just need to invest more.
Great. Well, thank you very much to all of you. This is a great panel and a great discussion. Appreciate it. Thank you.